Okay, yeah. So, good evening. We talked in our previous class. We talked about hold on. Okay, we stopped at okay. I think our next class is supposed to be on supply and demand.
Yes.
Yeah, and I said I was going to explain something yesterday. Can anyone remind me? Because I think I've forgotten what I wanted. So explain. So if you don't mind, or if you still remember what I discussed or what I said, you can just so I can further explain it. And we can try to pick out a limit or trade.
Okay.
And
You wanted to say something about I think breaker, like the way you enter.
okay, yeah, something like this region, right? Whenever the
Yes, yes.
region breaks, okay, let me explain that. It's up. Oh, sorry about that. Um, so this is. Let me just let me use this. Hmm. It's a buy. Call here. Okay, I think we can still use this example. Can you see my screen, or I should try to?
Yeah.
I should try to expand it.
It's okay. It's okay.
Much better like this, right?
Yeah.
Yes.
Okay, yeah. So this is one thing about breakers. If you look at this region, you see that the market actually what penetrated this zone. I think I picked this zone. I sold this zone. I remember very well. I sold this zone. Why did I sell this zone? Because I know that this region here, if you look at, as I explained on hold, that whenever price goes, the price gold bought for about 240 pip to this region from down to the top. That's 240 pips. We should what? We should expect at least a sell, right?
Yes.
Yeah. So immediately it formed this sponsor. I was saying something about whenever gold buy or sells for a long time, and I see a sponsorship, more like an order flow, I will enter it because I know for sure the price will try to retrace before it continue in the original direction, right? So that's exactly what I do. So imagine, okay, now we see that price has been buying for quite a while to the upside, and we notice a little pause here, right? That might look like price will want to continue from here.
Yes.
It might look like price want to continue from here. Whenever it's hit this zone, it want to continue back up, right?
Yes.
Are you following?
Yes.
Okay, so what I do is whenever I see something like this, I don't take this buy. Why? Because I already I can see an order flow here that is going to sponsor a very large volume of sell, because this zone is now what is now more exhausted. It's exhausted. We have been seeing a buy for a very long time now, or the volume of the buy is more like it's getting exhausted. That's why we got a pause here, more like a pause of price at this zone. We have a pause here, and then we have what? We have an order block. We have another block. What do you know what order block means? We can, this thing have different names. A lot of different traders call it different names.
I want to ask something about order blocks.
Okay.
Order blocks, is it compulsory it must have an inefficiency? Because
No. No. I will explain different types of order block.
okay.
Yeah, I will explain different types of order block and why you may not call them order blocks. because these things are more of hold on please. They are more of engulfing candles.
Okay.
Yeah, because they are and one candle is engulfing the other. So it's an engulfing candle. I will explain the real definition of order blocks for you. So
Okay.
this is an order block here. Then the volume of sell is what is pressurizing the buy, right? Meaning that this pressure here is already trying to take out most of the buys after the pause. So if we see something like this, the next thing we have to do is pick this zone as a sell zone, because we'll surely see price. Try to take out all the liquidities that are below this price. You see all those weeks, they are liquidities. So price will surely want to take them out. The ones at the top here, the ones, I don't want to complicate things with terms of different terms. That's why I'm not using complicated terms. Now, that's why I call them liquidity. So you can understand better. They are weeks, but they have liquidity resting on them. I mean, they have volumes. They have volumes resting under the candles. So that is why we call them liquidity. So price tends to what? To come and pick all the liquidities here. That is why you see the longest week here, which is what we are going to regard as the low right here, right? And then if you are someone who doesn't take long-term pips, I will still explain the pip target for gold and how you can trade gold consistently. So we already have we have a liquidity that we want to take out here, and we know that, look at the volume of sales. It's sold right inside the volume, inside this pause. So we know that the volume of sell is pressurizing our pause, meaning if price go back to test this order block, which is also called the order flow, we then see price tend to go lower, right?
Yeah.
Why you won't target this region? Do you know why you are not targeting this region? Can actually be a valid order block. Let me delete this zone here. You see this zone here can actually be a valid order block. Why? Look at what happened here. Look at this price, try to test the zone, right? And then went up almost 100 pips from 1781 to 87. That's like 60 pips. So it went up 60 pips. Then we can't take this zone again because we already have it tested by this. So all we have to do now is, because we have seen a very large volume of buys in the market, then we tend to see we tend to try to sell the retracement, which is this. So we wait for market to test the zone, the order flow zone, then we sell. So looking at or measuring the volume of sell that happened here is about 100 pips, which is always my target. 100 pips is always my target for gold. Wherever I see a volume or an order flow region, I always target 100 pips. The minimum I target is 50. That is half of 100 pips. So the only thing, or the only time you see me targeting more than 100 pips on gold is if I analyze with a daily time frame, which I really don't do anymore because of the trading for prop firms and all that don't allow weekend trading. But when I trade with personal funds, I take trades on daily, and I swing for about a week on gold. That gives about 300, 400 pips for me. So you taking this point would have given you 100 pips with thorough analysis. So that is what happened there. So that is not my word. That is not what I want to explain on the chart. What I want to explain is, whenever price gets to take out an order block zone that has been tested, right? Yes. So whenever price get to break it, or price come back to test it and break it, what do we do next? What we do next is to mark out a point like this that retailers call um, um, resistance called
Resistance.
yeah, they call it resistance that turns to demand, but meaning this zone, retailers don't actually know where exactly it's going to start the buy when they talk about resistance turn supply or supply turn resistance. But with other flow trading, you can pick out zones that you take your trades from and where your stop loss will be there. So the next thing you do is whenever you mark the zone that got broken, look at it here. This price tested here, right? And it created what? Equal R.
Equal.
Yeah, created equal R's here. So created equal R's here. And this zone, right? This zone here. Let me pick this one again. So if you look at them, we have equal R's, and this is what? This is the zone, right? This is the zone. This is the zone that triggered the this is the zone that triggered the break of what? Of the equal I, right?
Yes.
Yeah, this is the zone that triggered the equal I's. So what you have to do is note one thing, that we already have what? We already have the other flow zone that got broken. So the beginning of, or the open of this bullish candle, which is from the previous breakout, that's where you pick your entry from. Then you do something like this, and you put your stop loss right below. Like, am I making sense at all?
Yes, yes. Yes. But you said something about picking the peak. Like
Picking the
you said, you can be buying from this bearish candle before the upward movement.
this one,
You
this one.
know, yeah, you said where you mark right now, you said we can't be using that place for a point of interest, that we
Yeah,
should
yeah.
be
What I mean is,
bringing it
no,
down.
whenever, let me tell you something. I didn't say, okay, let me explain something now. Whenever a region that breaks a high, that breaks a high, let's say, let me take this away now. Let me explain this. Okay, look at this zone here. Look at what happened. You see this zone, this current candle is the one
Yes.
that broke this high, right?
Yeah.
It broke this high. Can you see?
Yes.
This candle broke
Yes.
this
Yes.
high. Abi?
Yes.
Candle that broke this eye here, that broke this eye right here. Look at what happened within that region. They have sponsor here. That is why you see price get here and then still buy. See, let me explain one simple logic about trading. Or you want to make very quick profit with low risk and get out of the market. This is what I do. Let me take a marker. We have a high, then we have a low, then we have a market, a price that breaks this high here, right? Then we
Okay.
will surely have what? The region that broke that high, the sponsors that breaks that high, there will surely be something that sponsored that area that breaks the high. Sure you get. So whenever price comes back
Yes.
inside that zone, there will surely be what? There will surely be a retracement or a continuation. Are you getting my point
Okay.
now? So the same thing,
Yes. Yes.
the same thing that happened here, that is exactly the same thing that happened here. You can backtest it. It happens every time. Every time. There's no maybe once in a while. It happens every time. The only thing that you might see changes on is maybe your stop loss might be wide, and maybe you might not know exactly where to put your stop loss. But it happens all the time. If you want to take such trade, you can take it without fear. But what is you taking a trade without knowing exactly where to put your stop loss? So it's better to take trades that are very clear, that yes, you know exactly where to put your stop loss. So looking at what happened here, This is the region that sponsored the break, right? It sponsored this
Okay.
break of structure here. That is why price came back. We tested the zone that broke the what? The high, which is what retailers call retailers call uh sorry.
Resistance turning to support.
Exactly. This is it. Just that. And what? You have taken about 50 to 100 pips. Okay, yeah, that's like 70 pips, 65, 66 pips. So it's very, very clear just for you to know when to exit. And if you are taking this type of trade, you should not go more than 50 to 60 pips profit. Then you are out. If you trade any stuff like this, I can promise you will be profitable for a very long time. You can be profitable for, in fact, for as long as you want to continue trading this. I trade this a lot. I trade it almost whenever I don't see opportunities in the market or I don't see good price. I wait for what price to give a break of structure, and then I look out what sponsored that break. Then I target that zone as my what as my order flow zone, and I enter, put my stop loss right below. Let's look for another scenario now. Let's you know let's look at another scenario. Let's try to look for it. Okay, yeah. So looking at what happened here, look at it very well. You see, we had a very short sell, right? We had a sell here, and then the price came here, came down and broke all the what? Broke all the lows, right?
Yes.
And the price went back up. This is what? This is another flow zone. What did price do to you? Price did you bad and what? And broke the structure, right? So
Minor structure, right?
exactly. So after breaking that zone, price came back to test the entry. As I explained, as I explained right here, see the entry came back to test it. This same thing happened here, came back to test. This is the entry of it, came back right below to test it. After testing it, the price went what further higher. So if you pick these zones as your point of entry and your stop loss to be about 30 pips to 40 pips, which will be around here, you should be profitable, and you might target, in fact, a very long term profit. So imagine you taking this also. You see, I've given you several examples, about 3 or 4 that works perfectly. This is about 100 pips profit. So let's look for another scenario. Okay, I think there's no one like that for now. Let's go back. Let's go back. Let's go back. So price. Let's try and mark this zone and see whether or not we get an entry here. 30 minutes time frame. Okay. Okay. This was sponsored by this. This was sponsored by this, I guess. Yeah, this failed. This one failed to happen. What could be the reason why it failed? Well, we have it tested for about 30 pips or 40 pips. That's 95 to 89. That's 60 pips sell. Yeah. And then went right up, came back down. Could have actually, let's see the lower time frames first. Let's see exactly what happened there. Okay. Okay. This is the zone. Yeah, it looks more of the and a news came out or something. Are you following me? Yeah, it looks
Yes.
more of a news. Yeah, this candles here look more of a news. So I think the news actually um, broke this rule here. So fundamentals break technical analysis sometimes when you don't align them well with each other, or maybe you are trading against the news. Of me recently, I really don't follow the news. I've not been following news for a while now because I've been very busy. So I think this happened. This got stopped out right because of the news that came out. I'll try to check what happened on the 30th of November 2021. So I think something happened. Um, Probably in news, definitely. So let's try to look for more example. Let's try. Okay. Hmm. This could have actually owed after this break, but we didn't see a test. We didn't see a test here. Do you understand what I'm saying about the test? Let me
Yes. Yes. Yes.
this one
Um,
got broken, right? Got broken, but the market did not test the zone. It just went straight down. So mm, let's look for more. This is another example. This is another example. Can you see that? But the problem here now is that it didn't get to our main point of interest, which is what I was saying the other time, that you don't know exactly your point of entry or where to put your stop loss in this type of trade. So it depends on your own sentiment, that okay, where do I want to enter? Do I have to be aggressive on this type of entry or something? So you see, this setup is actually very clear that you want to it's actually very clear that you want to pick a trade right inside the box, and you want to put your stop loss right below this, like this, like this. Do you understand?
yes.
Yeah. So you want to make sure that you don't get stopped out, and at the same time you want to make sure you make some profit. So you can leave your stop loss at least 40 pips from your entry. 40 pips. Imputes 40 pips. Yeah. So 40 pips from your entry, and then boom, to the upside. So you can also use this one, you can use this extreme as point of entry. You can use the top of the can use it. Okay, let me explain something. If your sponsored or other flow zone, the candles are not too large, I mean not too large or something, you can put your entry as the top and your stop loss right below this point, just like this. And if the candle is more large or something, you can also do the same, putting your entry at the open of the bullish candle. So that's exactly how it works. Or if you are very aggressive, you can then put, if you have a very small account like $100 to $200, and you want to trade gold, you want to be profitable, and you want to be very aggressive, you know that okay, using 0.01 in maybe 3 or 4 places, and the price goes to like 100 pip, that will give you about $30 on your $100 account. So you can stake or be aggressive throughout the candle and set your stop loss. It's still it will make sense because you'll be profitable at the end of the day. I'm not saying you should overload or over leverage your account. I'm just saying max of at least 3 positions, split them inside the other flow zones, then put your stop loss. In case it comes down to penetrate the last order, then you'll surely be in a very good profit at the end of the day. So that is what how this break of
So the target can just be at that equal high.
Yeah, exactly. The target can be right above whenever you close the zone, or let's try to look at what's at the upside to look for more. Yeah, your target can actually be, if you look at what happened here, this zone was broken. The equal highs, I mean, was it equal? It's not equal high actually. This is a liquidity zone here. It was broken, and then it came right back inside to test this zone. Then we can target this zone as our take profit. Why? Because this is the last zone of the previous liquidity. So we can target this zone as our take profit. Can target that zone as our take profit. Why? Sorry, to see. I will explain now. So looking at this structure here, you should know that we already have what, let's use the retail methodology now. We have what they call breakout, right?
Yes.
Yeah, we have what they call breakout here, and breakout happens, continuation happens at least if this zone here hold. So we can say yes, we have a very long, we are going to have a very long short trend. So but then at the end of the day, it got broken, the line got broken, and then came back to test the zone of the retail methodology concept, which is the breakout and retest strategy. And then boom, we target this zone as the highest zone of those recent highs, and then we take that as our take profits to be 286 pip. That's very massive. That's about 7 to 1. So it all depends on the type of trade you want to take. So I said I was going to explain. I hope you understand this part now.
Sure.
Yes.
Okay. So the part I want to explain is actually how to trade sessions. I said I was going to explain how to trade sessions, but before that, I would like us to go through the hold on, I'm trying to look for the book. Oh, where is it? 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 Okay. Yeah, so we're going to talk about the demand and supply. So in economics, we term supply and demand as a relationship between the quantity of a commodity that producers wish to sell at various prices and the quantity that consumers wish to buy. This is the main model of price determination used in economic theory. So, okay, running out of time again. We have 10 minutes left. Okay. So as termed in economics, we have its breakdown into understanding by saying demand happens during discount prices. You know, everyone wants to buy when the price is very, very low, right? We want to buy at a very low price. But at the end of the day, a lot of in different assets nowadays, a lot of people that wants to buy are scared to buy because they feel, what if the price keeps depreciating? So they don't want to buy at demand zones. They want to buy when the price is pumping, which is making them lose more. So, but the real methodology or the real idea behind the concept of demand and supply is to actually buy at the discount for demand and at a premium for supply. So you should buy when the price is actually very low, and everyone would love to actually purchase a good or market when price is low. And in supply, we have the opposite, which traders or people, let's say, in the general market of normal markets and outside the the foreign exchange now. Everyone outside or everyone in the term of economy wants to buy or sell, right? So they want to buy at a very discount price and also want to sell at want to purchase at discount and want to sell at a premium when price is very high. Everyone wants to sell to make more money. So that is exactly what we mean by the supply and demand in the layman definition. But in Forex, we have banks and financial institutions who tend to drive price in their centralized way, making retailers like you lose your savings and deposits. Meanwhile, they make money and earn your stop losses. They're likely to control real funds in form of paper money. Yes, these guys don't actually trade the real funds you think they trade. They just provide so much of liquidity of which they don't lose money. They only lose money in the stock market, yes, but in the real time for foreign exchange market, they have a whole lot of money as liquidity, so they don't get liquidated. You can never hear or anyone say a country get liquidated of funds. They have enough funds. They have enough paper funds to print out to supply their goods and to boost their economy. As we have in Nigeria, if Nigeria ever say they get liquidated, they can only say there's recession of things, but they can't say there is no money because they actually they really had the one printing those money for us to spend. So they really can't tell us there's no money. There might be an inflation in price or something else, but still they have enough liquidity to run the business or to run the company, to run the economy. So that is exactly how this thing works. So by this statement, I mean they are in control of the price algorithm. So they can manipulate the price because they have what? They have the money. So, and you with your 100, 500, 1,000, 10,000, 20,000, even to $100,000 can't even stand near them. Yeah, Forex trade about $6 trillion per day. So your $100,000, even your $1 million is nowhere compared to how much is traded in the foreign Forex market in a day. So the market at supply, when price trades back up to its unfilled orders and then trades back lower after these orders has been filled. This happens with the concept of the rally-based drop. We have what we call rally-based drop to more like know a demand zone and a supply zone. We have three concepts called the rally-based drop, the drop-based drop, and rally-based rally. So here we have the RBD, which is also called the rally-based drop pattern. So this is what we are trying to explain here, which is the rally-based drop pattern. We have the rally to the upside, created a base right here, right? And then it dropped a little bit, came back into the entry, which is what the rally base drop, come back to the entry zone towards to pick the entry, which is the main drop. So this zone is called the base. This is called a retracement back inside our entry. So we have.
Sorry, can you not call this area, that place is consolidating as a base? This place that is consolidating here, can we not call it a base?
This zone
place,
here.
No. This one, let me annotate.
Okay.
This area, can you not call it a base?
Okay, this area. Yeah, we can call it a base because we can call it a base actually, but you want to take the market. If you look at what happened there, actually, you see that price actually reacted at that zone too, right?
Yes.
Can you hear me? Yes, you can call it a base. Price reacted at the zone, but the main thing you should look out for is the overall structure of the market. You can take intraday trades with this pattern. I'm just using this as an explanation to explain the rally-based drop and the rally-based rally and drop-based drop.
Okay.
This zone is a zone that you can pick. Even I would have picked it as what? As a base. I would have picked this as my entry for buy, more buy, and the whole zone here for more buy, then eventually sell from here. But still, we are explaining the rally because this is actually a rally to the upside, and then a base right here that makes the price come down lower to break this structure here, giving a break of structure here, saying that we now have sellers in the market. Then went back right inside the base. This is the base that sponsored the break of structure, right? So we want to what? We want to sell from here, and then boom, we started selling right down. So that is how the rally base drop pattern works, and this is termed in a supply scenario. We have the rally base drop pattern in a supply scenario. So okay, yeah. So let's look at this again. This is called the what? The drop base drop pattern. The drop base drop pattern. You know, I told you about something. We have to look for major zones. Major zones. How do we know major zones? Major zones are zones that are in the middle. Let's say we have a very long drop, which is a momentum drop. This is a momentum drop, and then we have a pause. This is a pause. Likely, it's so sure that it's a pause. After this pause, then we had what? We had another momentum drop. So this zone will be termed as a major zone. So we can also take this as what? As a base zone, right? And that is why price actually reacted from there. But this is our major zone. This could be our minor zones because we are getting to the downside and the momentum could actually get even more lower. So there might be a low momentum here, but this zone will definitely be what? Will definitely be our major zone where we would like to sell even with a very big lot size. So if you look at what happened, price came back inside the zone, inside the base, then dropped rather drastically, and then to our profit target. We can see that.
Yes, yes.
Yeah. So I said I was going to send the book, but I've been out taking drugs and been resting. So I'll try to send it this night after the call. So that is what the drop base drop, or we've explained the rally base drop, and this is drop base drop. And we also have
So if you don't ask something about that zone, major zone, major
okay,
zone,
okay.
this area, which,
Can you mark it?
and that's what I'm doing. Which,
Okay. Hold on. Before you mark, let's end this one. Then we start a new one.
okay.
All right.